Welcome to a new season of Market Makers IL, where we pivot slightly and do a deep dive into the world of private banking. We're going to tell you why, we're going to tell you how, we're going to tell you the details of some of the products. We think you're going to learn a lot, we're going to have a lot of fun, and we hope you do too.
And still, no suits, no ties, and we'll leave no question unasked.
And we'll be talking about conversations that talk about shekels.
And some dollars.
And no investment advice. So why do you think old guys like me just don't get the crypto market?
I think young guys like yourself just need to take the proper time to understand the new world and how digital it has become and why it is very native and natural for this new world to have its own modern digital economy and currencies.
Well, that's optimistic. Michael, we're getting close to the end of another season of Market Makers IL. And I think the timing for this episode could not be better. In Season 2, we spent the first half of the season doing a real deep dive into private banking, asset allocation, products. But one thing we really didn't talk about was digital currency or crypto. There are a few reasons for this, including the reluctance of traditional banks to move aggressively into the space. But the time has come for us to at least dip our toes into this exciting and volatile new world of digital or cryptocurrency. And as always, there will be no investment advice. But first, a word of introduction. Ben Samocha, our guest, is Israel's #1 crypto influencer and the founder of CryptoJungle, the leading Israeli platform for news, guides, and analysis related to digital currencies and blockchain technology. Simultaneously, Ben founded Blockchain and Digital Currency College, where he educates the government, regulatory agencies, law enforcement agencies, banks, financial institutions, and more. He co-founded Blockchain B7, a nonprofit organization operating in southern Israel to encourage crypto adoption. This work also led him to teach blockchain and crypto entrepreneurship at Ben Gurion University and to lead Crypto Aid Israel, an international donation campaign that has raised 1.5 million shekels through crypto for October 7th victims. Ben appeared at Bitcoin 2025 in Las Vegas, which had over 35,000 participants. In short, for crypto novices like me, maybe you too, Michael.
Me as well, yeah.
We could have no better guide to getting up to speed on this extremely relevant topic. Ben, welcome to Market Makers IL.
Thank you very much for having me.
Welcome, Ben. So let's start with a few terms like crypto, Bitcoin, digital currency, blockchain. Just to name a few. Can you walk us through just some of those terms briefly? Highlighting the key things for someone really who's new to the space to kind of like understand the real basics. I mean, this is something that we've been asking maybe for more than a decade. I don't know, but
Exactly.
This is still
Here we don't have to be embarrassed. We're just asking. We're just asking
course.
questions, as they say.
Of course. So basically, crypto comes as a short for cryptography. Cryptography is a branch of mathematics that's all about encryption. And basically, blockchain technology is the name of the technology, has encryption and cryptography in it. So crypto is a general theme or topic for every crypto asset that is based on blockchain technology. One of these crypto assets is known as Bitcoin. So Bitcoin was the first cryptocurrency, a decentralized one. So it's not backed or managed by any government or central bank or financial institution, but it's governed by the blockchain network, which I will explain in a bit. So Bitcoin is both a network and a crypto asset that you can transfer anywhere in the world within 10 minutes, peer-to-peer, with no intermediaries in the process. That is all enabled by the blockchain itself. So the blockchain is generally a database, or you can say an accounting ledger. So today, if you're a bank and you have other banks operating in the same network, you want to transfer money, you go and exchange messages, pss, pss, pss. You write down plus, I write down minus, and each of the banks go to their own ledger and they write their own secret messages, right, of money transfers. With blockchain technology, it's a public ledger. So every computer hosts the same ledger, the same copy. Each of them contributes computing power so that they can manage it in a decentralized manner. So for example, in the blockchain of Bitcoin today, there are over 1 million computers running the Bitcoin blockchain from anywhere in the world. All of them managing and writing down the same copy. So instead of having a transaction sent as write down plus and minus, you go in front of the classroom, the international classroom, and you say, Ben sent 10 Bitcoin to Joe. So everywhere in the world, people go to their own ledger, they write down the transaction, and through the cryptography, you can verify independently that you wrote it down the same way that everybody else wrote it down. So what you have is, for the first time in history, a way to create trust within with billions of people all over the world without a need for a central authority to be governing it in the process. The blockchain network operates with its own open source rules. So all the rules that that dictates how a transaction is written, what can you transfer, how many coins will there be, etc. All of it is written in open source code that can be verified. With Bitcoin, it's more than 17 years today. So by participating in the blockchain network, whether you're a user that just holds and transacts Bitcoin, or you're a verifier, a validator, or a miner in terms of the Bitcoin network, you can participate in other ways that are also financially beneficial for you and contribute to the network itself. So,
what you raise here, as someone who's grown up on the traditional financial system or even in institutions, you say transparency, and I ask about privacy. So where is that? What's the balance of those two things?
So the balance is in the Bitcoin native pseudonymous. So basically, every individual using Bitcoin can start an address, a wallet address, and that wallet address can be later on connected potentially to the individual or entity behind the address. So it's sort of like an email address that you can write down bensamocha@gmail.com, and that will be very transparent that it's your wallet address. Or you can write down Mr. Cool Guy gmail.com, and then only if Mr. Cool Guy does KYC, you can attribute the wallet address to him or the email address in this point. So basically, every transaction on the ledger is publicly available and recorded. You can, using free tools like Blockchain Explorer or more advanced tools like chain analysis, which is software that was designed to track down funds and to create a know your transaction, so you can actually create a better and easier route of the money, where it came and where it's going. You can do it all on the blockchain very transparently. So on the one hand, what you get is, for the first time in history, you have private digital money that is trustless, global, and censorship resistant. You can use it anywhere in the world. All you need is just a phone with an internet. And it has its own rules, so you're creating competition for central banks and basically government money, fiat money. So that's the good side. But the less good side is that you have to take into consideration privacy as a user. So how to transact properly without leaving traces that allows anybody to just track what you do. So on the one hand, you can see the independent monetary policy. On the other hand, you can see the history of the ledger.
If we put the digital part of it on the side for a second, and you just look at like traditional money, and you mentioned governments, and I guess this is a governmentless sort of solution. What problem is digital currency or cryptocurrency actually trying to solve? And you can go back as far as you want. I saw a panel you were on. It went all the way back to Bretton Woods back in the at the end of World War II. So where are we in that development? And there's some positives, but obviously there are going to be other people who view some of this as very negative and including on the regulation or the legality side of some of this.
Of course. So that takes us back to the first question, because today the crypto sector is very, very distributed by itself with different use cases. So Bitcoin, for example, its main and most important use case is to be a better form of money when you compare it to fiat money. And fiat money, government issued money, is basically being inflated away, printed to infinity, and in a rapid pace and an accelerating pace. So the idea is to create some kind of an equivalent of gold and its role in our history, so that we can use it digitally, cross-border, easily, and very efficiently, with transparent monetary policy that nobody can just change on a whim or using a keyboard, like Jerome Powell, former head of the Fed, said, we can print money digitally. And he literally went on 60 Minutes and did like that, how easy it is to print money, which money is basically a form of energy and time that allows you to transact it. So that's the Bitcoin main value proposition. Bitcoin is a better gold, more equipped for our century, where we live digitally. After Bitcoin, about 6 years after Bitcoin was created, Ethereum came along. And what Ethereum did is basically reshaped the technologies and what we can do with blockchain. And from there, you have many different use cases that are needed and consumed at the moment. On the one hand, you have what's known as DeFi. DeFi is short for decentralized finance. And essentially, what it says is that you can create applications on a blockchain, but on the back end, instead of having a government server or a bank server host all the transactions or the New York Stock Exchange or the NASDAQ issue allow you to transact and to trade with one another, you can create applications based on the blockchain that allows users to interact peer-to-peer directly one another. So you can today, and there are over $100 billion worth of it as we speak, you can trade cryptocurrencies directly with one another. You can take loans no matter where you stand in the world. You can just issue and receive interest, or you can take a loan, etc. You can participate in insurance pools, and you can do many other tools that are commonly used today by very specific institutions in the financial world. So essentially, you distribute it and allow many other players to participate in the global scene of finance. That's one use case that is huge and is building on the blockchain. And from that perspective, we're sitting here in a very advanced city in the country of Israel, which is also relatively advanced. So it's easy for us with our financial privilege to look at it and say, why do we need it? Mm-hmm. Our financial system is very advanced. You guys, your bank is in Switzerland. It's like top of the line, and all. You have everything you want to use. But for 4 billion people who live under monthly very high inflation, that's a use case for them that they didn't have before. 2 billion of them are unbanked. They don't even have a bank account. So now they can participate in the global financial economy directly from their mobile phone. And just to give you perspective, today, less than 20 institutions hold more than 95% of the wealth and the capital in the world. Less than 5 payment companies host more than 90% of the payments in the world. So by allowing this competition to come in a decentralized and distributed manner that is global, you create very big opportunities for this unbanked and or inflated population. So that's the DeFi world.
Sorry, a stupid question. If they are unbanked, how can they buy cryptos to then spend cryptos?
They can do it peer-to-peer. So today in Nigeria, in Turkey, in Argentina, in Zimbabwe, in Vietnam, you have very vibrant peer-to-peer markets that you have some kind of a community member who serves as a trustee. So he receives the cash or the bank transfer or the some kind of other form of money. And
it has to start with cash. If they're unbanked, like they go to that guy and then...
Exactly.
So it's basically a replacement bank.
Absolutely.
When you say unbanked, you mean uninstitutionalized banked.
Exactly.
You're going back to private banking almost. A different kind of private banking.
Which is free market, free competition. And more importantly, when you put it in a perspective that most of these countries and most of the population in these countries, they don't like their government. So the government is usually either a dictatorship or
corrupt.
Somewhat democratic but corrupt. So they create cages around the banking system and they create separate markets for dollars, so that if you want to use dollar through the banking system, you have to basically be 50% of the official. The exchange rate will be 50% lower of the black market rate. So now they can access not just cryptocurrencies like Bitcoin and Ethereum, etc., but that leads us to the other sector, which is the sector that connects both of the worlds. So we have this decentralized world that is now being created as we speak, Bitcoin, Ethereum, and all these blockchain and decentralized finance applications and usage. But there's the hybrid world where you can create stable coins and or tokenized real world assets. So stable coins are basically government money, but they can live on the blockchain. So I hold in my wallet, at my digital wallet, I hold a coin that's named USDT, US dollar Tether, because it's issued by a company called Tether, and there's Circle with USDC and PayPal with PYUSD, etc. And I can send this digital dollars anywhere in the world, peer to peer, and I don't need to be verified by Tether or by PayPal, and I don't need to be living within their ecosystem. I can simply transact it to a person living anywhere in the world. I told you when we spoke beforehand that one of my students was traveling in Costa Rica, and he was at the coast, watching the sunset, and this local photographer came and took a picture of him, and he wanted obviously money to send him the picture, but he told him, I have no cash. So the photographer asked him, do you have crypto, stable coins, or Bitcoin? He said, yeah, I do. And he paid him $5 in USDT on the spot and received the picture. So it's international language of money that's been applicated through this. And for some people, it's more directly to stable coins. So they prefer the dollars and mainly dollars. So there are euro-backed stable coins, but nobody uses them. So it's mainly USDT and USDC. But there are also today tokenized real-world assets. So even you have institutions like BlackRock, they issue a money market fund on Ethereum blockchain that today manages more than $5 billion. You have real estate that is being tokenized with, instead of having an apartment complex of 1,000 meters, say you basically make it into 1,000 tokens. Each one of them is 1 square meter, and you can basically hold and trade and sell just your part of this complex, including automatically receive the rent payments, etc. So this is where the world is going, and this is today, those two, stablecoins and tokenized real-world assets, are the largest growing themes of the ecosystem. The major financial institutions are in, the major banks are in, the government is obviously very, they like it, especially the US government. And I would say these are the main applications when you look at crypto as a whole today.
The cynic in me, though, says that there's still this sentiment that a lot of this was invented or first implemented, let's not say invented, for illegal activity. And while the empowerment story that you're talking about for people in high inflationary areas makes a lot of sense to me, the developed world story seems to say, oh, this makes a lot more sense if I'm working in the gray markets or the black markets. How do we balance that? How do we answer the cynic in me?
So I will ask the cynic in you, if you know that the first active users of the cars were bank robbers, because then the police couldn't chase them with horse. Or the first users of the internet were the pedophiles, that they were using it to send images and to sell children to one another. So you cannot adopt new technology and expect it to be market ready from the very early beginning, and with the natural limitations that we potentially want to include in it. Eventually, money is a tool. US dollar through the banking system today is mainly used to drug use.
I know the $100 bill story. That's what you're telling me about.
Exactly. So today, money is a tool, just like a hammer is a tool. You can be a terrorist and use the tool to kill somebody with the hammer, and you can use it to hang a picture on the wall. And it's true that the first applications that people saw were the ones that go around things, right? So you could go on the dark web and you could buy drugs and you could buy fake prescription drugs, etc., and stuff like that. But eventually, as you grow today, by the reports of the companies that work with the FBI, with the Interpol, with the US government, the crypto usage for illicit activities all around, including money laundering, including frauds and stolen money, and all of that is less than 0.5% of actual on-chain, which is on the blockchain, crypto usage.
But didn't you say at the beginning that the crypto transactions are here to be seen by the entire world? It's like when you said pictured it like saying, dear world, Ben is transferring 5 bitcoins to Joe. So does that mean that those illegal transactions are made public?
Yes, this is why they stopped using it. This is why illicit activities barely conducted through Bitcoin today. And unless, I don't know, you're Iran, which they created some kind of money routes, mainly through Pakistan and stuff like that, in order to try and launder those Bitcoins. But eventually, because of the trace that you leave, it's very hard to then launder the money into the existing financial system. It will become harder for law enforcement agencies, which I also teach in my college, to be evolving with the technologies, because today there are more privacy enhancing technologies that on the one end are very good for users. For example, if I'm a right-wing voter and I want to donate to the Likud, right? So I don't want it to be attributed to my wallet address because my boss might be a Democratic Party voter and can see that. So privacy is, for a reason, a right very protected by the U.S. Constitution and by any democracy that respects itself. So privacy-enhancing technologies are being implemented all over the place, also being worked on Bitcoin, and it will be on the law enforcement role, and it's a job to better educate themselves on how to treat it.
Without giving any specific advice, what is the best way for a beginner to start trading cryptocurrencies? In a portfolio, and which currency and how how do we do it?
So my best recommendation is to first free up 4 hours, and I'm generous, and learn why crypto was created, learn more about why Bitcoin came into the world, and why basically there's so many criticism against how money is managed today by central banks, and why it is doomed to die. Money dies. Even the shekel is called the new Israeli shekel because the old one died. And I believe that when people understand that we are speaking in trillions in terms of market cap of the biggest equities, it's not because we are more wealthy. It's because money is worthless. And when you have a unit of account like the US dollar, that the central bank of the central banks, like the BIS, the Bank of International Settlements, they claim we found $16 trillion of FX swaps we never knew existed. What does that mean for the entire pool of money? When the Federal Reserve Chairman says we can print money digitally, what does that say for how easy it is to basically wash away our energy and time? So having that understanding when you're coming to learn about crypto, asking what is money, helps better understand why you want to buy it, where you want to buy it, and how you want to hold it. So in terms of where you want to buy it today, essentially in every country, there's regulated financial institutions that allow you to go through KYC and acquire your Bitcoins or Ethereums or whatever through your bank account. And it's relatively easy, not necessarily on the way back if you want to sell it, but if you want to go through regulated institutions, it's relatively easy. From there, you have the decision where you want to hold it? Do you want to custody it with this financial institution or regulated, licensed crypto broker, or do you want to withdraw it to your own wallet? So in crypto, you have self-custody, which is where you hold the Bitcoins yourself. So eventually, Bitcoin can be dumped down into a secret code that is somewhere between 12 to 24 words, randomly generated words. And you can hold those coins on a note. And you can go through borders with your Bitcoin in a note. But that means you have the responsibility and the accountability of managing it. So if that note is getting wet or on fire, you might lose your Bitcoin if you didn't have a backup. Now, this process requires a little bit of learning. It's not complicated. And what I usually recommend to newcomers is to split it, have 20, 30% of what you just bought in self-custody so you can start preparing yourself to this new world and to understand with yourself how much of your wealth or your crypto portfolio you want to manage it within self-custody, and the rest of it, hold it with a regulated financial institution, mainly because we have been accustomed in the last 20 years to give away the responsibility to anybody but ourselves. Just hold it for me, do it for me, please, please, please. And now we're taking a bit of it back, especially because there's a lack of trust basically building up in the system, or it's becoming much more apparent anywhere in the world today.
I like the word trust because I think that that's underpinning the whole idea of money is this basic idea of trust. And you've talked about a couple of different things, and you've set the stage for this brand new world of crypto being, I think, almost the fiat currency. But you've got governments that are printing money. You've got gold as a standard where there's a finite amount of gold in the world, but you could argue whether the price of gold reflects that or not. And then you've got the whole Bitcoin. Everybody's mining it, but there is a limited number of Bitcoins out there. So who are you transferring responsibility to? And if you've got multiple Bitcoins, what does that say about supply and demand in terms of the total addressable market? Because if there was one currency like gold, I would know it's out there and I could value it. If anybody can create their own, what does that do to the new system that you're envisioning?
Yeah, so let's first discuss gold. Gold is, in terms of sample size, the best money out there, even though in terms of transparency, you don't really know where the gold is being held, how much of it has been reapothecated through ETFs and derivative markets and Bank of England, which it's relatively known that didn't really have all the gold that they said they did, nor does Fort Knox. So you have a lot of lack of transparency there that also needs to be addressed if you want to be able to better use gold as money today. But I think that when it comes to gold automatically separates the discussion between the two main characteristics of money, which is a store of value against medium of exchange. So gold is not equipped and cannot be a medium of exchange today. It could be through tokenized gold. So today you have more than a $10 billion market cap of tokenized gold, which lives on the blockchain and is also managed by this same company, Tether, that is the fifth largest buyer of gold today, and it's the single entity that holds the most gold. So other than central banks, Tether holds the most amount of gold. And it is true that tokenized gold can be adopted like Bitcoin does, but you still have this trust mechanism that you have to trust Tether that their audits are true.
And there is some gold.
There's gold backing it. With Bitcoin, you don't need to do that. With Bitcoin, it's open source, it's transparent, you know where are all the Bitcoins. Now, it's true that in terms of supply and demand, you have these effects of limited supply, which is reducing as we go. And there are only, out of the 21 million Bitcoins that we will ever have, 20 million are already mined. So 1 million to go. And it's going to go up to 100 years from now that they will be created. And every 4 years, they will be reduced. The inflation rate is it's disinflationary. It's reduced every 4 years. So we know today that there are not enough Bitcoins. But I put it in the quota because it takes us back to this question of the usage of money. And if money is basically a storage unit for time and energy that you want to be able to transfer all over the world easily, especially in this digital world, Bitcoin is maybe there will be 21 million Bitcoins, but each of them is divided into 100 million units. So if the dollar is 100 cents and the shekel is 100 agorot, Bitcoin is 100 million satoshis, and you can divide it even more. So what's important based on Austrian economics is that not how many nominal coins you have, but how much you can split into lower decimals, and that's what Bitcoin allows. When it comes to other cryptocurrencies, they are not Bitcoin. They are usually created, at least at the beginning, by a centralized entity. That centralized entity usually takes some amount of equity to their own. So 10, 20%, 50% of the newly created coins are going to them. And therefore, it creates a lot of conflict of interest. It creates a lot of mechanisms that make it much more complicated to evaluate whether they'll be here in the long term, whether the token economics serves the actual purpose of the blockchain project, and many other questions that we speak about, and both as investors and people that are working in the industry, and they need to be aware of this analysis. So that's why we separate the discussion. There's Bitcoin. Bitcoin is the most secure, the most decentralized, different than any other cryptocurrencies, and cannot be replicated. You cannot create other Bitcoins. You can try and create Bitcoin Cash like they did in 2017. Bitcoin Cash is now worth 99 times less than it used to because it's not the real Bitcoin. Same for Bitcoin Gold. There was another attempt to create a different Bitcoin based on GPUs instead of CPUs, but it's now worth almost zero. So you cannot replace Bitcoin and all the other coins. What I believe eventually we will have is the 80-20 rule will apply here as well. So I believe when we transition to this new digital money world, 80% of it will be built on Bitcoin, whether on-chain, which is on the blockchain itself, or off-chain, which is using centralized entities or other solutions. So that will be 80%, and 20% will be built on other blockchain networks with applications that are more suitable to what they try to create, like decentralized finance, like stablecoins, like tokenized real-world assets, etc.
So you're effectively saying you're going to have U.S. dollars, Swiss francs, and Zimbabwe, whatever's, just they're going to be digital, so to speak. So you've got Bitcoin, call it the fiat currency of choice. You could say that's dollars, you could say that it's Swiss franc, whatever. And then you're going to have 20% of these sketchy kinds of coins that you could be playing around in or using for other kinds of interests.
So that takes us to the topic of the panel that I participated in, Bitcoin Vegas 2025 and the Bretton Woods 2.0, and basically where I envision the world is going in the next 10 to 15 years. So I don't think Zimbabwe will have a coin, nor do I think at least 50 countries are going to be abandoning their coins in the next 10 to 15 years. They will do so because Bitcoin and stablecoins will be so abundantly used by their own populations that the government will lose control of money and money creation in their local economies, which is why they will have to be dependent either on the dollar or on Bitcoin or both. That is my basically thesis. And the reason I believe that is because the U.S. government made it very clear that they're going to be using both Bitcoin and stablecoins and tokenized real-world assets as a weapon to any country that is basically trying to de-dollarize, right? So when you look at Brazil or when you look at China, the population itself wants dollars. They don't want to be holding Chinese yuan. They don't want to be holding the Brazilian real. The government, through its cages, has managed to lock them until now in those ecosystems. But now, when you can use stablecoins from any regular wallet easily, so dollar is basically infiltrating directly to the users. A few colleagues of mine went to Argentina about 6 months ago. There was one of the largest developer conferences in the world. If you go anywhere in Argentina, not only you will see the signs of crypto accepted here, also in Turkey, by the way, crypto accepted here. If you pay with Bitcoin or stablecoins, you get a 5% discount because they don't even want to go through the Argentinian peso, which devalues every day, basically. And they simply want to skip that either to the dollar, which is their own safe haven, and that is what they know, or to Bitcoin, which is more the advanced savings tool that most of them are already familiar with and are using it for some portion of their wealth. So that is one vision that I have. Other is that the U.S. government has made Bitcoin a strategic reserve asset. Today, they did it so far with presidential decree, with executive order, but there is a law that is already drafted with Trump's support and the entire Republican Party support, which is the Bitcoin Act. And the Bitcoin Act basically means that the U.S. government is planning to make it by law strategic assets like gold. With gold, it's in the Constitution, so a little bit less than gold. And they're going to buy 1 million Bitcoins in the next 5 years since the rule is passing. So 1 million Bitcoins, that's almost 5% of the maximum supply. That is, in today prices, $65 billion worth of Bitcoin that they want to buy. And they want to hold it, and it says so in the law, for at least 20 years. Meaning the US government sees Bitcoin as a tool to be deflecting their own debt against, so that they can basically hold Bitcoin, let Bitcoin inflate the dollar, and by holding Bitcoin on their balance sheet, they can reduce the debt against Bitcoin, which allows them also to export the inflation instead of bringing it back home. And this is said by Scott Bessent, the Treasury Ministry.
This is a balance sheet exercise.
Sorry?
It's a balance sheet exercise.
Exactly. Not to mention that they also have 8,000 tons on their balance sheet that is currently priced in 1974 prices of $45 per ounce. So if they make market to market, and this is basically their plan, by the way, they plan on marking to market the gold on the balance sheet. That creates more than $1 trillion on their balance sheet. That is gold claims. With that, they plan on buying Bitcoin. They plan on reducing the Federal Reserve losses, because the Federal Reserve operates in almost 300 billion loss. And that's their general goal.
Well, with all this good stuff going on, you've still got all these crazy meme coins. You've got official Trump. How does that impact kind of the integration of crypto into the acceptable usage category?
Yeah, so I think both meme coins and the fact that we have a sitting president launching his own meme coin and his wife meme coin on the day he starts his second term, I think both of it reflects where we stand on money. Because money has become so cheap and life has become so expensive that people have to go to terrible ideas like meme coins in order to bet their life savings and try and work with a Doge or a Shiba or a Floki or whatever to try to 100x their wealth because they want to escape this race. And having a president, I will use allegedly corrupt in terms of launching its meme coin. That is also the politicians that are serving today, not just in the US, but anywhere in the world. They reflect how low society has become, because it's not about substance anymore or context. It's just about, are you with me or are you against me? And that kind of extremism on both sides, I would say, is a result of bad money management. And I'm very gentle when I say bad money management, and I would recommend to the listeners to go visit WTFhappenedin1971.com. Obviously, you understand the meaning of WTF, and basically, August 1971 is when the U.S. Ditched the gold standard and basically made dollar not convertible to gold anymore. That is what happened after a 10-year bank run by mainly the French and Dutch governments, that they took the gold back to their countries and left inflating dollars to the Federal Reserve of New York. And since then, basically, you have so many things that when you look at it through the glasses of money creation and money management, you get a sense of why we are living in a K-shaped economy, why the wealth distribution and the extremism is the largest since before World War II, since the Great Depression, and why the world looks like it does today with two ongoing major conflicts in the Middle East that we are experiencing here and in Ukraine and Russia, which I believe will also expand into Russia and Europe, potentially Taiwan, China. So we're living in a dangerous, chaotic world, and that is, to me, it starts with money. And money then, tickles into everything else.
What about the banks, and where will they need to be in terms of digital assets in order to compete in the next 10 years?
So banks should immediately understand this market and adopt it as rapidly as they can, including in some cases engaging with regulators and central banks in order to allow more access. Eventually, this is the major competition banks were afraid of, and the banks, especially the big ones, are a regulated, protected cartel, and this cartel is breaking because now there is a free tool for users to hold private money and to create loans and interact financially with one another directly without the need to have a bank. And the more we go into this world that I described in this episode of financial and economic wars, of monetary inflation of every fiat currency, some of them faster, some of them less fast. But in this world, people will replace, they will find alternatives. And if the banking system does not adjust to this new competition by allowing more transparency, by potentially allowing collaborative custody, like today there is something called multi-signature, so that you can hold an asset with the bank as the trustee, but the bank cannot move it by itself. Only it needs your approval. Stuff like that, that's the new world where it's headed. And Bitcoin-backed loans. Today in the US, there are also, in small amounts still, but Bitcoin-backed mortgages, that the mortgage is basically moving with the Bitcoin price with some kind of downside protection and upside potential. So the bank also becomes a partner in the potential growth of the underlying asset, which is substantially larger than what the housing market can do. And obviously tokenization. So when you look at financial markets in Singapore, in Hong Kong, in Dubai, which are the new financial hubs in this new world, and they're major competing with both also Switzerland, but mainly the New York and London markets. They are like the things they are doing there in terms of both gold and crypto markets are insane. Very accommodating regulation that allows them to attract much more capital. And that's happening as we speak.
Can you rank for us, just not by better or worse, but maybe by progress along the curve of adoption, countries and perhaps even banking systems that are moving faster or better, I would say better maybe, but faster towards the digital answers?
So today, every Wall Street giant is deep inside, not just by allowing their investors to buy and sell and hold crypto. That's like the easy way. They are issuing tokenized funds. They are issuing tokenized equities. All of them started their own divisions with managers, with blockchain departments, in order to not just provide investors the research and opportunities to invest, but to actually create the tools. So today you have regional banks in the US that have partnered with a stablecoin issuing bank, and they are basically making they don't need to transact anymore through JP Morgan. So if you're a Federal Reserve bank like JP Morgan that has their own account, and you're a regional bank or a community bank, you have to go through this hierarchy in order to transact to a different Federal Reserve branch. Today with stablecoins, you don't need to do that. So banks are creating their own stablecoins and connecting to other stablecoin networks with better liquidity and with private money transacting with one another. So it's a huge game. It's very early in it. So there are a lot of opportunities for banks to do it. And in terms of where in the world, so obviously the US is very advanced, and especially with the new regulations, the Genius Act, the Clarity Act that's about to pass, and the new heads of the SEC, the CFTC, the Treasury Ministry. They have the control of the currency. So all of them are very on board, and they are they allow basically everything. You have Dubai, Singapore, and Hong Kong, major hubs for crypto and financial institutions that are creating this innovation there. And basically that's it. The Europe regulation made it very hard to operate in the crypto space. Many international companies chose not to operate in Europe because of it. Switzerland is different on that front. So Lugano has become basically a major hub for crypto. It is basically owned by Tether today in every single way, but you have more than 50,000 business owners in Lugano accepting crypto, and actually people use it there. In both cantons of Zug and Zurich, you can pay with crypto taxes. Financial institutions there are much more allowing in terms of what they approve to use. So yeah, it's growing substantially.
How do you think we'll be able to buy a pizza with Bitcoin?
So you can already do that. Today, you can already do that. Usually still using an intermediary. So it's still in this hybrid world, but not the perfect Bitcoin world that we
So
that
can
we
I come
wished.
with the phone and just like
So
tap it?
I can show you right now, and I'll show it to the camera as well. I have on my Apple Pay this card. It's connected directly to my wallet. I can use it anywhere from here downstairs to buy shawarma to my entire Thailand trip last year, or my Bitcoin Vegas trip, where I didn't need to use not my bank, not my credit card. I simply used my crypto. It's connected directly to my wallet. And what happens behind the scenes is that I hold the crypto, I pay with crypto. My wallet provider takes a cut, a 1% cut with cashbacks, and behind the scenes he converts it to dollars or to Thai baht and gives it to the business owner in the currency that he chooses. But today in the US, for example, you have Cash App, which is one of the largest payment companies there with more than 40 million active monthly users. And in Cash App, not only you can use Bitcoin as payments directly to any business owner, and the business owner can choose whether to receive it in dollars or Bitcoin. But if you're a business owner using Cash App, you can choose behind the scenes from any incoming payment, dollar or Bitcoin, how much do you want to convert up to 10% directly to your savings account, which is your Bitcoins. So today you have business owners in the US doing that. PayPal allows the same internationally. So it's becoming much more usable. And that's why you have time, right? Time allows technology to evolve and to be better suited to what it wants to give you.
What happens with the volatility, though? Like, what's that transaction is measured at the exact current blockchain price of Bitcoin?
Yeah, in the exact moment that you make the transaction, that is when it is transacted.
So how much of that, if you look at the Bitcoin volatility, how much of the movement I'm sure that 99% of the movement is speculation and 1% is transactions, or where are we there?
So today you have on-chain volume of Bitcoin that basically can exceed the annual usage of Visa. So on-chain transaction is very big. Still, I would say probably more than 50% of it, but not as big as you said, is for speculation. So for example, you can move it from one exchange to another to try an arbitrage and stuff like that. But people transact Bitcoin, and I would say most of the Bitcoin users today hold it as investors and not as users because they understand the good money drives out bad money rule. And when you have a good money, bad money drives out good money. And what I mean by that is that myself, for example, I don't want to use my Bitcoins. I only use it when I'm abroad because then it's more convenient for me.
Frictionless.
And it's frictionless. And it's an opportunity for me not to sell Bitcoin through the banking system because the banking system demands my proof of funds and to source it. And then I have to pay 20,000 shekels for an accountant to provide this report. And I'm not participating in that. So by using my crypto directly with this wallet or with this card, I can basically, I don't need the banking system to be in the process, but I still use the banking system as a way to short fiat money and long Bitcoin. So I buy with credit and I buy Bitcoin every month. And this is why I do dollar cost average. I buy every month Bitcoins, and I don't want to spend my Bitcoin because if I believe money is dying, which it is, so I want to be holding the better money on the other side of the death, which is what people do with gold eventually. This is why also gold went up 3x in the last few years.
Wow. Maybe we have to go do something after this episode and figure out our future here. But I think, Ben, you've certainly enlightened us, taught us a lot about digital currency, good money versus bad money, and a lot to think about here. Let's end with some lightning round questions just to have some fun as we celebrate the demise of the traditional monetary system.
So for a very quick question, you just answer it as you get them. First of all, what is your worst career advice you have received?
The worst career advice that I received. Interesting. I would say hold back even though you have the hunch that it's the right thing to do. So sometimes career advice can be more conservative, even though your stomach tells you that you need to take that risk in order to either save your business or to make it bigger. And I found myself in 2 times accepting that advice and not doing it. And then time passed and I realized that I was right. And if I made my move, it would have been much more beneficial.
Who's your business icon? And here it could be the guy behind Bitcoin, Satoshi, but maybe somebody else.
Honestly, I don't have a business icon. Even though I'm a persona myself, I have many followers in Israel and people respect me and my brand, etc. It's hard for me to be as accommodating for that concept. I believe we are all human beings, and human beings can do good things and bad things, and human beings can make mistakes, and you can learn from so many people. So I believe it's better not to idolize somebody, because if something happens to his reputation, that can reflect back on you. So if you want me to give a small example, it's Michael Saylor with the Bitcoin space, which is...
I can't believe we didn't even touch on that guy, but
yeah.
I'm glad you brought him up.
Yeah, so he's the founder and chairman of Strategy, which is the company that took billions of dollars, tens of billions of dollars worth of debt and equity issuance in order to buy Bitcoin, and he currently holds more than 840,000 Bitcoins, which are worth more than $50 billion. And he has become this persona in the crypto space, in the Bitcoin space, this one guy that people adore, that people look up to it. And I never loved that. I love listening to him. He's very informative. You can learn a lot. You can learn a lot from him. But I never went to the process of idolizing him. And now is when he starts selling Bitcoin, all these Bitcoiners, now they hate him.
Exactly.
You said you never sell your Bitcoin. And I'm like, he's doing the right thing. This is what he should be doing. I respect him for that.
Yeah.
And by not idolizing it, it allowed me to move forward.
Easier question. What is your best Israeli snack or Israeli, how do you say?
Junk food.
Junk food.
Junk food or snack is different. For snack, it's malabi. I love malabi.
Oh.
Junk food, I would say, depends where, how, and how junk it is. But hummus, Israeli hummus, is like the best thing you
Classic.
can do.
Yeah.
And what's the last thing you changed your mind about?
Many things, actually. I would say my business plan. AI is changing everything, and there I don't think there's a business anywhere in the world that isn't affected by it. And when you create content and education and provide a platform for a community, that AI today changes all of that. People learn differently. They educate themselves through chat, GPT, or whatever. In the digital world, you create different communities today also because of AI. So the last thing I changed was how I envision my company in 2027 and beyond. And mainly that.
Look at that. We got AI in it. We got Michael Saylor in it. We got hummus in it. I think we got it all. Ben, this was great. Thank you very much for teaching
Thank you,
some
Ben.
gray hairs like me a little bit about the future of money.
Thank you very much for having me.